Hey guys, welcome to this week's podcast episode. I'm really excited about today's guest, Karl Baker, and he's the founder and CEO of Infinity Commercial Capital, and he's helping people find money through their loan products. It's going to be a fantastic discussion about finance, real estate, financing, and I love having entrepreneurs on the show talk about their business. So, Karl, welcome.
Thank you very much, Christopher. Nice to be here. I really appreciate it. Looking
Yeah,
forward
we
to
were, yeah, I'm really happy to have you. We were chatting backstage, about the
it.
whole weather, and kind of talk about your background, your experience, and how you got to start Infinity Commercial Capital.
Sure. Well, I'm a licensed CPA, have been since 1992, so for over 30 years. I spent 25 years in public accounting as a corporate auditor. And that took me really all over the country, professionally and personally. I lived in Missouri for many of those years, and I lived in Boston, Massachusetts for many of those years. So, and then since then we've moved back to Missouri. But for 25 years, I was a corporate auditor, and 7 years ago, I kind of went back to my roots and asked myself, how do I want to spend time? And I really wanted to spend time doing value added, forward thinking consulting. And, I've been in finance and financial related stuff for a long time. So I didn't really want to totally reinvent myself, but wanted to do something related to finance and financial stuff on a kind of a go forward basis. So I became a consultant, a CFO consultant, and on the entrepreneurial side, that caused me to realize, hey, I can earn a living on my own. I jokingly told people that my mission statement, you got to have a mission statement. My mission statement when I started in 2017 was don't go bankrupt. And when I realized that I could earn a living, it caused me to free up my mind and I found myself thinking, what do I really want to do? What do I want to do? And I went back to my roots as a college age student, and I really wanted to be a banker, a lender. And so I coupled all of that. I coupled my financial expertise, my accounting and financial reporting expertise, and became a commercial loan financing advisor about 4 years ago.
Yeah, I love that story. And just if money was not an issue, what would you do? And I love starting from that, especially since 2022, 2023, this idea of just surviving. And if you survive these last 3 years, I mean, you're way ahead and you built up all the infrastructure for you to really succeed. It's just going to get better from here. So I love talking about these themes and it's talking about this evolution of commercial lending and advisory. And you've got extensive background in how have you seen the industry evolve over the years and what are key trends and changes businesses should be looking at today?
Well, so I guess I would say the economy, it's kind of like what politicians say, it's the economy, stupid. And just understanding the need to look at a business, build a business the right way, and do that in a way that is a part of your expertise and a part of your skill set and your interests. So I would say that's a big piece of it. Just putting a good plan together is another thing. Putting a good plan and just making sure that you've evaluated risks and finances and just put all that together.
When talking about just especially with interest rates, what are your thoughts on that? Because people think the interest rate cycle has peaked, and so kind of talk about your ideas or where you think everything's going.
Yeah, so I was actually just talking about that with somebody else, and especially in the world of real estate investing, so many people are asking, is now the right time to buy? Should we wait? Should we wait till interest rates go down? And I remind people that if you have a good deal, that good deal will always be there. And the way I articulate it is the win in a real estate investment, the win is in the property. And many people get hung up on rate. And usually as a lender, that's the very first thing that I am asked when they're trying to decide whether to use our services. What's the rate? And that's usually, in reality, it's one of the last things that a person should be evaluating when they're evaluating a real estate deal. What's the rate? Certainly that's important, but is there going to be cash flow? Do you have the expertise to manage that property? Do you have the reserves and the liquidity and the experience to do that? Let's talk about all those things first. Is the location the right place? So there's lots of those things, because those things will long endure beyond the rate. The rate can change, but that's my question when somebody asks about the rate. But in terms of where do I think rates will go, there's been a lot of evolution in that thinking, even in the last few months, to bring up some technical things. But there's the concept of the inverted yield curve. So right now we're in an inverted yield curve scenario, and we have been for a while. So a person could invest in a 1 year, 2 year T-bill. Their options are to invest in a 1 or 2 year T-bill or in a 10-year T-bill. They're going to earn a higher return from the 1 and 2 year T-bill than a 10-year return. And usually it's the other way around. If you're going to tie your money up into something, you would think you would get a better return if you tied it up longer. Whereas right now you can invest in a short-term note T-bill and receive a higher return. We're waiting for that to flip, and we think that will be a trigger point for the economy. But I do think over the next 12 months, and I'll stop talking here in a second, but over the next 12 months, I do think rates are going to come down. There's just a lot of economic pressures. There's political pressures. People are there's a lot of pent-up demand, and I think the Fed will respond to all of that and come up with a reason to lower rates.
Yeah, it's quite interesting because basically it's really how you look at things, and it really makes it hard when the interest rates change, and it's like they're able to change it on a whim, and then you have to kind of resort to, like, sometimes people speculate on these things, but ultimately the deal works if the numbers work. But again, it's so hard because we're coming out of a pandemic, and now we've got war and recession and inflation, all of this, and it's really hard to elections. Yeah, it's so hard to invest, because it's like, well, you don't want to put your money if it's gonna drop by 30%, but just put it in a 5%, or you don't want to tie your money up for 10 years and just have it sit there, and then they raise the rate again, and then you lost out on that.
Well, I think that highlights the importance of taking a professional approach and understanding the risks, and capitalizing on and responding to those risks, and doing that in the right way. If you don't have any experience in managing a 100-unit multifamily apartment complex, well, it's going to be difficult. First of all, it's going to be difficult to procure that property and manage it effectively and obtain the financing you need. But if you could get through all of that, there's real expertise needed in that and understanding that. And that's just an example. But it really highlights the need to understand the risks, understand the skill sets, and understand how to evaluate a deal and whether it's a right deal for you or not.
Yeah. Kind of the next question I have is strategic financial planning for businesses, and you've been involved in this area. And share your insights on how businesses can effectively plan their finances and investment to ensure long-term success. Kind of piggybacking off this idea where economic uncertainty, you're talking about profiting from risks. So I'm curious to hear your thoughts.
Yeah. Well, I think understanding what it is, if we're just talking about strategic planning from a business perspective, whether it's related to real estate or owning a pizza shop or a gas station or whatever, some of the overarching skill sets related to all of that are the same, and understanding what your plan is, what are your interests, what are you trying to accomplish, Who is your customer base? Do you have the following that you need to have the customer base? In the world of there's actually it's a whole thing to help business owners navigate through the concept of strategic planning. It usually starts with some sort of a SWOT analysis, strengths, weaknesses, opportunities, threats. That can become cliche, but it's really true. Understanding what your business plan is. Do you have a business plan? What are you trying to accomplish? And those sort of things. And then just navigating through that.
Like I said, again, all of this, we know all these are topics of discussion and ideas, and we're just kind of skimming the surface. And, again, it's not, none of this is like professional advice. It's just more to kind of whet your appetite. And so the next thing is in today's financial landscape, it has been extremely complex. So, what are some common challenges businesses face when seeking financing, and how do you personally guide them through these complexities to secure funding?
Yeah. So I use the concept or the phrase financial positioning. I think if a person is wanting to get a loan, and just very briefly, I've done this before and I made mistakes and I learned lessons. 20 years ago, I was thinking about being an entrepreneur. I was knee deep in my public accounting experience. And I went out to some lenders and I said, I'd like an SBA loan so I can start a coffee shop or a sporting goods store or something like that. And I literally, physically, audibly got laughed at because I wasn't prepared. I wasn't positioned. I wasn't prepared. What I was thinking was, I'm a borrower, you're a banker, your job is to give me a loan and help me get this business off the ground. And that's not really the role of a lender. The lender is there certainly to help you get you off the ground and help you if you're a startup, or to help you expand if you're in business. But the lender's role is to help you provide that capital. The lender is not there to take on your business risk. And I think that's important to understand, is the difference between lending risk and business risk. A lender is not going to take on your business risk. You are taking on that business risk, and the lender will provide the capital in alignment with a proper analysis of their risk profile. But understanding all of that, understanding the lender's role and positioning yourself to qualify, I think is a great first step. Understanding what it is you're going to do to get a loan, and understanding what I call the 4 C's: cash flow, credit, collateral, and capacity of borrower. Experience, what are your reserves? What are your personal financial statements? Understanding all of that and understanding how it fits into your borrowing request. The overarching concept of that is what I call financing positioning, and being ready for that, and not just reacting to the lender's questions, but proactively navigating through that by understanding those when you go in to get a loan.
Really interesting. Yeah, it's always a love-hate relationship with the bankers, lenders, borrowers. But if you can, like I said, if you can have a good relationship, then your businesses can really succeed. Talk about non-traditional financing, and how has that changed the playing field for businesses, and give some examples of non-traditional financing in modern business.
Yeah, I think this is a fascinating subject. So we're all taught from the age of 16, when you need a loan, you go to a bank, right? You get your first car, then you turn 25 or 22 or whatever, and you buy your first house, you go to a bank. And by saying all that, I am by no means downgrading the importance of banks in society. I don't mean it that way, but there are other places where you can get a loan. And it really just depends on what type of loan you're seeking. But let's just talk about real estate for a second. Of course, you can go to a bank and get a commercial or a conventional loan for a real estate investment, but a little known secret, until you get into it, there are many non-bank lenders across America that are competing with banks in providing capital. They might be bridge lenders. They might be helping real estate investors with rehab type projects. There are non-bank mortgage lenders that are providing 30-year fixed rate commercial loans. And you can't get that at banks. They fill a need, and they're quite competitive in terms of rate. And they're competitive in terms of rate. They're competitive in terms of that underwriting process. You referenced the love-hate relationship in navigating through the loan process. There is no doubt that getting a loan has a hassle factor. There's a hassle factor. No matter how you do it, there is some version of a hassle factor in getting a loan. And some lenders really run you through that ringer in the context of their risk profile, and some have a simplified underwriting process. So there's that. Even one other quick thing, I've talked about real estate financing. If you're a business owner and you're needing working capital, well, the concept is, the notion is that you'll go to a bank and get a working capital loan. Well, banks are going to require collateral, but for the most part, banks are collateral lenders, or they are credit-based lenders. If you don't qualify at a bank, where are you going to get it? There are many hundreds, thousands of non-bank working capital business lenders out there that will help you obtain a loan. So that when we talk about non-bank lending, just understand that there are capital solutions all over. A lot of times they're financed, they're capitalized by institutional investors and the sort, and it just creates a market.
Yeah. Yeah. I love that. And once I figured out, there's other ways, like there's not just the tradition, there's like hard money lenders, or if you know a good mortgage broker, they can find you those loans. There's a lot of different ways. Kind of final question is, as a real estate investor and host on a podcast of commercial real estate investing, what advice do you have for individuals, businesses looking to venture into real estate investment, and how does this overall time the financial management, especially in today's climate?
Yeah, great. It's a great question. First of all, it's important to understand that investing in real estate is a commercial exercise. So just like like I said, owning a pizza shop, owning a gas station, owning something else, a nursing home, it's a business. And the reason I say that is to understand that, but also if you're going to become an expert, or if you're going to be in that business, you need to be an expert and take it on professionally and understand the risks and everything. But you also, this is where I was really going with that. You also have to really like it. So if you don't like the concept of managing a piece of property, then you're probably not going to like owning a rental property unless for some other reason. But setting all that aside, my point there is you have to like whatever it is you're doing. And then people buy real estate to build wealth through the use of other people's money. You can grow your wealth profile because you can appreciate a real estate portfolio using less of your own money and still have growth and tax planning and tax avoidance and those sort of things. I don't mean that illegally. I mean using taxes in a way to your advantage. There's just a lot of advantages to owning real estate. The other concept is passive income. I own a handful of rental properties. You probably own a handful of rental properties. We're making money on a monthly basis through that rent. That rent coming in is paying the mortgage. Meanwhile, we earn a few bucks, and eventually we can sell that property and make a gain, or use the value, the equity in that property to monetize that equity and invest in more property. And that's the other reason why people invest in real estate,
Yeah.
to grow their wealth in all those different ways.
Yeah. Most successful investors I've known, they have real estate as a component of their portfolio or their investment thesis. And like I said, like I'm not a big fan, but it has it's like has it
Mm.
advantages unique to unlike any other asset class. So, I use that, but real estate it's slow, it's big, it's bulky, it's inefficient, but it's a sure thing, but over the long term, that's how you build your wealth. It's not something where you can quick flip, or these types of, it's not these get rich quick schemes. It's very slow and
Mm.
steady, and it takes a lot of work too, so it's not easy. So most
It
people.
is. Yeah, you're right. Some people, I get calls on a weekly basis. I am a commercial loan broker, and I get calls on a weekly basis from newer people, and they think it's a get rich scheme, or they think they can get 100% loan, and none of that happens. But people like the real estate. I mean, you make a great point. It's not for everybody.
Yeah.
There are certainly other ways to build wealth, but people like it because they can sink their teeth into the real property,
Yeah.
and at the very least sell it and hopefully get their money back. So
Yeah. Yeah. How can people
it's a good component.
how can people find out more about the work that you do?
Yeah. So our website is infinitycomcapital.com. And that is in the word infinity com, COMM, capital.com. They can email me at kbaker at infinitycomcapital.com, or they can call me 314-403-7745. And happy to chat with anybody.
Yeah. For all the audience out there, let's thank Carl for coming on, and what a fantastic discussion. Like I said, real estate, it's a sure thing, but it's a slow thing, and it takes a lot of work. Not for the faint of hearted. And with that, thanks so much for coming on.
All right. Thank you very much, Doctor.